And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Tuesday, June 22nd, 2021. The market did finally reveal what its intent is and what direction it was going to be going, at least for the near term, in my opinion. And so we've eliminated basically the two more negative in terms of downside counts and scenarios for now. We will get downside, but not similar to what we were believing could have taken place. So we broke above levels that it really needed to. And as you can see, I've now always have left the minute wave 4 at this low, but we ran the possibility that it could swing down again, put it in a new low and shift that 4 over. And so we would not be in a wave 1 and 2 because it wouldn't have happened yet. That does seem to now be in the past, although it's not off the board totally. It's just kind of on the sideline for now. So I'm counting this as sub-minute wave 1, sub-minute wave 2, as we do come up and finish minute 5, which again is going to be completing minor 5, then is going to be completing an intermediate wave 5 and a primary third wave. So we are reaching a fairly longer term high on that primary level. So we should be dropping into a more long-term corrective phase. There can be plenty of upside, plenty of downside, plenty of all around side to trade. So again, this is just what we're finishing. And so we want to be prepared for when primary wave 3 does finish and primary wave 4 begins. It's going to be really good to have that knowledge of, or the expectation of, and also wrapping some parameters around what the potential for that initial downside will provide. So that's why I do think there will be plenty of wonderful, great trading, and P&Ls will grow substantially. That's my feeling. I think that we are within this minute third wave. The minute third wave is also subdividing. So the S&P was not as strong today as it was yesterday. But so the NASDAQ was the, okay, we'll catch up. So the NASDAQ was the stronger moving market and again moved to new all-time highs, just under 14,300 as a matter of fact. So the S&P I had felt would get closer to that 4,258 number today, but it kind of got held back a little bit. Some of the component stocks just were not as strong as one would expect. In any case, it just suggests that this minute or sub-minute wave 3 is subdividing as it should, and likely it's just finished wave 1 of that and wave 2. So we got sub levels. We're really getting down there to the granular as we mark and track this finishing advance. Our resistance levels, the first one of which should just be a pause, which I think it is came in at 4,243 or 44. We got up to just above 45, fit perfectly, and then we pulled back. So we should yet, I think this third wave should easily get itself up to the 618 level, breaking that high at 4,258 and getting up to a minimum, I think, of 4267. And that zone actually is right here. So these Fibonacci numbers, when we're relating them to a third wave, which is going to be related to the first wave, these are what I'm looking like as a minimum. But if indeed wave 3 is in force and we're going to balance it against wave 1, that's just where internal waves are going to finish. I do think then this should get up to here before all is said and done. And so 1, 2, 3, 4, and then a 5. So we're just in the beginning stages. The way I'm reading this, we're just in the beginning stages. So it's a 1, a 2, I believe a 3 will come here. We'll get a 4 and a 5. We'll take us up to there. Now, we've got a lot of stuff going on in the market, which basically really doesn't even have anything to do with the economy or the individual companies. What I believe is really happening is that we have portfolio managers, hedge fund managers, and other managers of funds, ETFs and everything else, that they are making their adjustments to reflect the end of the second quarter and moving forward. So there's a lot of like, we're getting back into this, we're getting out of that, we're getting over here, we're going over there. So they're positioning themselves for the next quarter, or maybe for the balance of the year. Who knows? But in the process, I'm kind of taking it that they're a little bit bullish, because the markets have really just kind of taken off and they're pushing to new highs, and we're all kind of looking at each other going like, why? We've not gotten the economic proof yet, I don't think. I know we're still working on it. We're still trying to work our way back to the new normal. But nonetheless, here is what the Fibonacci projects. And remember that Elliott is a measurement of the psychology of the market, so whether somebody's bullish or bearish. And then the Fibonacci puts limitations, or not limitations, but puts parameters around how bullish or bearish the crowds may be, the market may be. And so ultimately, I'm still looking above here for the completion of wave 3. And I would anticipate that we get a little bit higher up into here to finish the whole thing, possibly even that. That would be, pretty much up there, because what I now can do, in fact, I'm going to do that just so we get a cleaner idea. Let's take those extensions off. Allow me to go back. Let me go up to the 4 hour and see if I can get it on there. I can. All right. So from here, I'm going to put Fibonacci's. Yeah. That's the one. I'm gonna have to adjust that, but I have to go down to the hourly. Let me make my adjustment so that we're going to be very. See, this one came out way too low. I'm going to get that to 26.75. So let me go do this real quick, and that's going to give us the Fibonacci for the entire fifth wave. And let me just readjust this one. Sorry about that. This is 58. Now, where did this one come from? 62. So yes, we can fine tune our Fibonacci. Good, there we go. Okay, so again, where I think that 618 would, wave 5 would be 0.618 of wave 3, which is very common at 42.52, but that would be a failure. And this doesn't kind of agree. So I stick to what we were talking about before, but I'm looking for wave 3 to likely get us up to 4,300. So the next one up is that wave 5 would be equal to wave 3, and that would be a 4,029. So that's likely going to work, because I think wave 3 can get us up to this zone, like I said before, then we go to wave 4, and then we go to wave 5. So we're still looking at that 4,300 level, but I think it's going to get above it, and that's going to put another little head fake into the rally. Now, should it really gain some speed, then yeah, we do have these upper levels. Not necessarily looking for those, but we have them, and the market should definitely go there, can definitely go there. Not will, but it could. So we got to leave them up there for right now. But I think we're going to have to rely on the more common relationships. So the zone is right there and then there. Now, downside should continue to be shallow, should be more limited as this wave progresses, because just look at the depth and the strength of the rallies. So pullbacks are going to be not that much. Like, say, for example, right here, it's still, when you're trading it, it's very tradable because it was a 22-point move. You know, high to low, 22-point move, nice, with a nice rally in between. So that's when we go back to our Elliott. And we got here and we started to pull back. Well, we start to look for an ABC. Well, then you can throw Fibonacci on these internally on your smaller time frame charts, the 1, the 2, and the 5 minute. You can use Elliott and Fibonacci and put them up there. And you can get all of that in line, and then you're ready. When you finish that third ABC down, you know your next level is you're going up. It was finished. Now we're heading up, pulling in another 5. And that's exactly what the market does. Also, moving averages, we're going to assist you on pullbacks. If you're looking for a little bit bigger, like right now, we're still within that third. If this is 1, I'm looking for only a wave 2. So you got that the 4, the 8, and the 20 should contain the move. Because I'm only looking for a wave 2. I'm not looking for it to really start to decline. So when you start to get breaks below there, you step back, you readjust if you need to your position, and you continue to trade because there continues to be these levels that could be reached. Okay, so, but I'm not feeling that that's going to be the case. So we'll stick to the shallower pullbacks and the nicer rallies, which now are back in force until at least this third wave is complete. If things start turning here, again, we step back and we got to take a look at what's going to happen. But this is the outlook for right now, at least tomorrow. And that's where I'm going to leave it. The next update will be Wednesday, the 23rd.